Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to GICRE presents CNBC TV 18 Mutual Fund Awards 2018 Curtain Raiser. I'm Sumaira Abdi. Well, over the last 25 years, the mutual fund industry has really evolved a great deal. When Morgan Stanley first launched its India fund, it was perceived to be an IPO by the investors. Today, of course, things are totally different. Investors here and the mutual fund industry itself has overcome a lot of hurdles to emerge as a 23 lakh crore rupee industry today. So as the industry itself can grow, so do the expectations from the investors. And who better to answer what is required to attract and satisfy the investor of the day than my panel today. So with me, I have Feroz Aziz, Deputy CEO of Anand Rathi Advisors, Gaurav Mashruwala, a certified financial planner, Manoj Nagpal, MD and CEO of Outlook Asia Capital, and Rin Agarwal, founder of Vumantra. So thank you very much, panelists, for being with me here today. And I want to actually get to know what the investors today want and where is that gap coming from and how we can actually bridge it. So Feroz, I'm going to start with you because you represent one of the bigger distributors. What has been your experience? And let me make it very recent, say over the last 3 to 4 years when the market has been at a peak. Are investors satisfied with the kind of products that are available? What do they want?
See, I think the product offering of the mutual fund industry has been reasonably elaborate. From a gap perspective, if there were some gaps, I think SEBI has done enough to bring a larger product basket. What is required is some degree of understanding of a product fitment into a portfolio. Transforming a group of products into portfolio is a task in itself, which has larger other variables to be taken care of. I think that's where the next leg of education is critical. Education in terms of transparency of products, risk return profiles, and the entire gamut of asset classes being addressed by products has been done so far. I think the next 10 years is going to be using products to create portfolios which marry the product, which is an external factor, to goals, which is the internal factor, and trying to build a bridge, I think, would be the next leg of move.
Gaurav, I'm going to toss this to you because I know that over the years we've been speaking a lot and you've been one of those big proponents of actually tying your entire asset allocation portfolio, etc., to goals. In your interaction with the investors, is that easier said than done?
No, it's not easy. It is tough because human mind hasn't evolved to that extent. So the clarity of thoughts that these are my responsibilities, these are my dreams, and once I've linked a particular scheme or a particular investment product to a particular goal, relax and just give it the time to nurture and bloom, that hasn't changed. So still that information coming in and they getting kind of psyched and all those things still remains. But I guess, Sumaira, that will always remain because it's a human mind. So fear, greed and panic. But yes, now the queries that come in, the concerns that come in, the product information that comes in, and what is the right way ahead, there is a drastic change. But in terms of customers' knowledge, there is growth, while a lot more is needed, as Feroz said.
Gaurav actually raised a very important point, which is that the knowledge is very, very peripheral. And isn't that sometimes more harmful? Because as we talk about the evolution of investors, people, they hear terms, they see some metaphors coming through. We've been speaking about how people think of dividend as an income in mutual funds. Is that more harmful? And how can the mutual fund industry sort of actually combat that?
Yeah, so here one of the key things to remember is that the average age of the mutual fund industry, as the industry progresses, is actually coming down. That's because a whole new breed or a whole new generation of investors are joining the bandwagon, and investor education is going to be a challenge all the time because the number of people joining the workforce and using mutual funds as the first time investment vehicle is always going to increase. Now this is, we believe, a wave has just started. The last 4 years is the first time we have seen a whole new generation of investors joining. So investor education is going to be a challenge continuously, and there will be some players who will try to take advantage of the lesser understanding of investors. Now, whether it's a part of the mutual funds or it is a part of the distributors or it is your friends and family circle itself whom sometimes kind of give incorrect information, though they may be wanting to help you, but inadvertently they kind of put you in a spot. So this is a challenge that will always be there. I think the efforts into investor education, hence from the mutual fund industry and from the distribution fraternity, has to be extremely high and has to increase continuously.
All right, and this is where Mrin comes in. So Mrin, I've been saving the last word of the opening lines for you because you're actually at frontier, right? Yes. Where you're actually meeting people from the smaller towns and cities. But you say that mutual funds, Sahi and so all, seem to be making an impact at the very grassroots. There are still a lot of practical challenges.
There's been this whole wave where at least now people know about, they've heard the term SIP, and I would say they're a little bit more open to talking about or looking at mutual funds as an investment compared to earlier on. So we do a lot of sessions at corporates, and you'll be surprised to know in the last 1 year we're actually getting questions on mutual funds, whereas earlier on it was all about insurance and endowment products, right? But I think the challenge that most investors still face is the fact that they are investing in a very ad hoc manner. Most of the advice is taken from friends or from colleagues, and there's no really goal planning in place before a person decides which fund to buy. And the other thing that I also find, and this is really surprising, but people do come and tell us that they're really confused by some of the internet platforms, and they find it very difficult to actually go and do the investment because sometimes they don't know who to go to, and they get really confused by some of the online websites. So.
Yeah, I know that makes a lot of sense actually, because I know a lot of people have come back to me and said there's such a wealth of data available that they just don't know how to sift through it and actually find actionable information on which are the top 3 or 5 funds that they should actually put their money in. So that makes a lot of sense. But Gaurav, let me come to you back on this. We've seen this whole SEBI recategorization, right? How are you explaining that to your clients? I mean, what is their expectation? Are they looking at debt funds now, which of course for some time remained a big mystery even to the savviest of investors? What is now the current trends?
So first is they weren't aware. Now that they are aware, some of them are fine, they are accepting, and we tell them that look, it's only recently this has happened. So now stop comparing returns straight away, because schemes could have merged the past data and the present data. That's number one. So let some time pass by. Some of them are really happy that some streamlining has happened. Ideally, they shouldn't have allowed so many schemes to come in. But anyway, that's happened. At least it's getting rectified. So to great extent, we are telling customers, investors, wait for 1 or 2 more quarters, let things settle down. And then even if there is some change required, modification required, we will look at it. As far as debt products are concerned, debt instruments are concerned, we have been always recommending, may it be for parking temporarily to do an STP or because the goals are nearer. So there, to that extent, we don't have too much problem.
Feroz, this whole streamlining, and we've spoken a lot when the entire recategorization was happening. Now new market cap categories have been created, right? How does that change it for mutual funds?
This regulation of October 2017 is such a large regulation that all regulation put together, I would say, that's the kind of emphasis this one has. The top 100, like they're called large cap, and the subsequent are called 150. Yeah. So the universe from which a mid-cap fund is going to choose large portion of its investment is going to be narrow. So that makes it a narrower mandate in mid-cap. In large-cap, fortunately, I think since you have 100 stocks now, most of these funds in the large-cap category were skewing their money as per Nifty weightages and Sensex weightages. Nifty's 50% of the money is in the top 10 stocks. So most funds were compelled to propel these stocks. Now there is larger mandate for large-cap funds, a smaller mandate for mid-cap funds. That's point 2. Point 3, which is important to note, is both these benchmarks have been created not on free float, on market cap. This means that these stocks going forward will be more volatile. Point 4, to my mind, the propensity to create extra return would be larger in the next regime because benchmark hugging will stop. So you can expect a larger alpha from fund managers, provided you choose the right fund manager out of the 132.
What's the advice for investors who are looking to make investments or their own expectations now from funds? I mean, the returns of the past, and also we have TRI coming in, the returns of the past perhaps not going to be seen again.
So I think, you know, whether the alpha is there or reduced will not be a determinant for a lot of people joining the mutual fund industry in terms of investors, and especially the new breed of investors. But that is going to happen is a given, and that should not worry the investors, or that will not even worry the investors who are joining in.
The other point actually, and the last point I wanted to make on how taxation on mutual funds is actually understood by investors. Do people in your sessions ask you about, if they were to invest, how would they deal with this kind of taxation? And is that something that's actually percolated now to perhaps, the grassroots level?
I think more than the taxation, I think investors at the grassroots level are still worried about the fact that their investments are subject to market risk. For a lot of corporates that we do sessions for in, let's say, Bangalore or Delhi or wherever, you'll still be surprised to know that most people do not actually have access to a financial advisor for various reasons. It could be because they don't know who to go to. For retail investors, I don't think it makes monetary sense for any advisor also to service them, right? So there's a bit of a problem there. The other piece is that investors themselves are really not willing to pay for advice. So end of the day, this person doesn't really know who to go to. And hence, the matter of churning and all of that is later on. Most of the time, churn happens to these investors if somebody tells them, hey, this fund is doing better, and they would just exit out of it irrespective of the taxation. So, that's really what my experience is with a lot of first-time investors across cities.
Yeah, that's true, actually. So the fact remains that, to get invested or to get started with mutual funds, people actually find it very, very difficult, but they invest in stocks at the drop of a hat. Yeah. But let's take a very quick break on that note. We'll come back in a bit. Up next, we'll talk about whether or not there's this fascination for actively managed funds, and is that now taking a backseat? We'll also try and find out the sort of challenges that investors in Tier 2, Tier 3 cities face because of the lack of distribution. Stay tuned, we'll be right back. Welcome back to our special show where we're talking about the evolving expectations from mutual funds. So we've been talking about what investors actually want from mutual funds and, more importantly, from their investors, and how the expectation today is not just of the returns but also of the kind of place that mutual funds should have in their portfolio. So Mrin, before we went into a break, we were speaking about the kind of challenges that people are facing. One of them, you said, is even having access to good advice.
Yes.
And therefore also having access to good quality funds. So does this challenge of distribution in your mind remain one of the biggest problems in terms of growing the SIP accounts, growing the folio accounts, growing the industry itself?
I think yes, because today if you have a first-time investor choosing a wrong fund or getting into it for a short period like 2 or 3 years, which is what most of them are doing, then certainly you will come at a point in time where they might have a bad experience for whatever reason and never end up investing again. So I do think that the mutual funds or the AMCs need to focus a lot on building an agent network, probably like the insurance industry has done, which goes to the last mile as well, not beyond your Tier 3 locations as well. And I really think that really is the need of the day, to have the right distribution channels in place and accessibility for people to advise.
Yeah, that's true, actually. But like with insurance channels, there's a lot of mis-selling that's happening.
Yes.
And with sort of commissions now getting capped, I really don't know how it is that this whole army of distributors can be created. Feroz, any thoughts?
See, I think to create an army, you first need to have, make sure that there is some degree of knowledge, point one, which is where investor education budget is coming, because an army who is new will not be able to convince the client to come on board unless there is a catalyst from an external factor like an electronic media or the kind of spend which is happening on investor education. Second, to create an army, and today we have only 2% of India investing in mutual funds. Globally, if you arrange us in the descending order, if you arrange the number of investors in mutual fund, we would be right down there. So 2% becoming 10% will definitely require maybe a few lakh more advisors coming in. For that, I think that has not been portrayed as a profession in itself. So to do that, you will have to have a train the trainer kind of a concept and have institutions which are just making sure that advisors are being churned out. And that's what I think a couple of institutes are doing as a basic job for a person who has finished his graduation. So I think having a target of about 4 lakh advisors is what I think the asset management companies were doing, and brainstorming, which I was a part of, and I think that's the right way to go.
Which would be a growth of 10 times?
10 times in the next 10 years.
Would a shift towards index funds, etc., make more sense, or should distributors in the smaller cities actually still go out and push some of these actively managed funds?
Most of the investors typically want to, invest in the hottest buzzing theme at that point of time, and that itself demonstrates, lack of advisory in the country, and that's, a foray that has to be built. And one of the things that the industry here together has to do is that, rather than just spending money on investor education in the name of, mutual funds, on an industry level also they need to have a budget to grow the distribution business, now which is sorely lacking at this point of time, and I think that is one of the initiatives that the industry should take. So AMFI needs to come together and build distributors for the entire industry rather than each AMC trying to build an advisor or a distributor just for themselves available. I think that's another challenge that the industry needs to come together to do it in the next 5 years.
Gaurav, what other initiatives can be taken? Do you think that perhaps having something like a universal KYC, which has been spoken about now for many years but hasn't yet seen the light of day, could that be the propeller of growth?
So in terms of procedure and processes, there has been a lot of simplification. It can be further simplified. More simple it is, easier it is. And going further, I'm very confident that that will happen. I mean, there will be more difficulties in terms of forcing that down, looking at the size of the country and the number of distributors or the advisors and the complexities. But yes, so these are the issues that we are facing, the number of people advising in tier 2, tier 3. All those are issues, but I guess we are evolving. We have to deal with that.
All right, so then closing comments. Mrin, let me first come to you because you've interacted with a lot of people in just the last 3-4 years. Therefore, if you were to sum up their expectations from the mutual fund industry, what would you say that is? What would they want to hear or want facilitated to sort of help them take the leap towards being a mutual fund investor?
I think it would be the right information, because I think today the access to the right information does not exist, and I've written a lot of times about this, that you need to have like a website or a platform that's giving you the right information in terms of, first of all, knowledge in terms of like a 101, right? So I think the main thing is that it needs to come from a neutral party, right? And it needs to be completely unbiased. And I really think that's what is the need of the hour, so that people just don't go by last 1 to 3 year returns. And of course, a lot of information on basics.
Manoj, your thought in terms of ideas for the industry?
Yeah, I would say the biggest challenge that the industry will face in the coming years is that if you just see the last 5 years, the investor base, that is in terms of number of unique investors investing into mutual funds, has gone up 3 times. So, 5 years back around 50 lakh investors were there, and now people say it's around 1.5 crores. I think in the next 5 years, this number will increase significantly and be in the range of 7 to 10 crores. So that's a challenge that of the scale that is going to change, that the industry needs to understand. And as the scale increases, the expectations of investors will be very diverse. Everybody who's a part of this industry, whether it's the advisors, the fund managers or the mutual funds, everybody needs to adjust to this big change.
All right, Gaurav?
So one is about the distributors. They don't need to chase HNI. They need to nurture HNIs and then grow with them. And for that, regular reviews, meeting them. Don't only go when there is a new NFO coming or when you require. If you start doing that, it's in the interest of the investor. It's also in the interest of the distributor or advisor, whoever it is. The moment they start doing it, we are going to see a complete different mindset. That's not happening today, because so many times we feel distributors, advisors themselves are not very confident. Start nurturing and both will evolve.
All right, Feroz, final word to you then, because I know that you've had the last few good years. A lot of investors have been coming. What is the one feedback that you think might actually now push the next leg of growth here?
See, the next leg of growth cannot ignore the most important pillar which other industries have used, which is technology. See, conventionally growing only in the advisor distribution model can get us to a certain extent. With reduction in costs for the investor, remunerating distributors to be in the industry is like a counterintuitive thing. So point one I'm making is technology will take this industry to the next level granularly. Second is, if you're looking at investments, if SEBI's rule of investor education sustains for the next 10 years, an expected 10,000 crores of investor education budget is possible. If an effective utilization could mean a lot of stuff, but if there is a good plan and a strategy to implement this, I think with awareness and technology, easy access could take the next level of growth. But the third point which I want to finish with is active management in India, okay, is still alive, and I think the extra return which the fund managers intellect in an inefficient market like ours can continue to be there for the next 10-15 years. The reason why I'm saying that is, if you look back 25 years, and the first funds which were launched have created almost 25 times more than the capital as extra return of the first 10 funds of the country. After having delivered such stupendous extra return, believing that that extra return is gone just because of a SEBI circular would not be fair to the industry, is my last closing remark.
All right, fair enough. Thank you all so much. So clearly, some of the themes that remain, one is that there are challenges still at the grassroots level. Amongst the major challenges is that there's a wealth of information that's available, and investors are just finding it difficult to sift through it and find actionable information. Besides that, distribution in tier 2, tier 3 cities, good advice, that remains a big problem as well. So perhaps, like Mrin suggested, that a neutral party offering data or investor-friendly advice would be well appreciated, as well as Firoz's suggestion on technology. So thanks very much for watching, panelists. Thanks very much for being here, and do stay tuned to CNBC TV 18.
Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.